Hello, good morning everybody. Today I'm going to talk about Balkrishna Industries, which came out with the results recently. The results were good at the top line with a volume growth of close to about 13% on a YOY basis and about 9% on a QOQ basis. And the volume growth has mainly come from markets like Europe and rest of the world. Also, Americas have performed well. India's were a bit subdued because of the COVID wave that we saw in the fourth quarter. That was in the first half of fourth quarter, that is January, and that led to some sort of subdued numbers. But overall, if you see on a full year basis, then India has performed well despite the first COVID wave or the second COVID wave of the of FY22 that was observed in April and May last year. So despite that, the numbers, the absolute numbers were quite good, though the contribution has slightly declined for India. But going forward, we believe that the domestic demand as well as the demand in Europe is very strong, and therefore we expect a very strong volume performance this year. Especially as the company is expanding its capacities. The current capacity is close to about 285,000 metric tons, which is expected to move up to 360,000 metric tons by the end of FY23, and the entire ramp up is expected to happen this year. New plants as well as brownfield plants are coming for the company and adding a lot of capacities, and these addition of capacities are expected to cater to the increasing demand overall across the globe, I would say. Talking about the realizations, which have also grown by a significant amount, close to about 22 odd percent for this year. That is also based on the price hikes that the company has taken, the product mix that the company has seen, the geographic mix that the company has seen this year. So overall the numbers were quite good. The margins this quarter were a bit disappointing because of higher freight and power costs, which resulted in about 21% EBITDA margins for this quarter. On a full year basis, they were close to about 23%. Going forward, the company has given a steady state margin guidance of 28 to 30% on a long term basis, which we expect definitely to come because of the price hikes the company is taking, the volume built up that is going to happen because of the capacities that are going to come, and that is expected to pour in good volumes. Especially the product mix is expected to improve on the agri and the mining side, and the demand is quite strong. So based on these, I think the operating leverage is expected to come up very well, and therefore we expect a good margin performance. 28 to 30% is like a bit far-fetched, but at least we expect about 25-26% kind of margins going forward in the next couple of years. So we think that the stock is doing quite well at these levels, and also the valuations are not very expensive. Also, the company is getting very much into aggressive marketing activities like sponsoring various sporting events across the globe, and that is going to give them a good mileage. The current market share is